Hello, friends. Welcome to the Weekend Investing Daily Bite of 5th of February. Uh, a good day, I would think. Broader market was going up, frontline market was stable, and we have not heard any other, coercive actions by any U.S. Side on any tariffs or anything like that in the last 48 hours, especially for India. Today's detailed video is going to be upon different sectors and finding strength and weakness there and how it can impact our investing. So please stay tuned to the second half of the video for that. Do read the disclaimer fully and do subscribe to the channel. Let's get into the markets charts. After the heady run yesterday that we had, where we climbed up almost 350 points from the previous day. Today was a flattish day, minus 0.18% on Nifty. Nothing wrong in that. We are very much in a strong short-term intermediate trend up, although the longer trend remains downwards. We will need to make a higher low and then create a higher high to start to at least go in the direction of an uptrend. So far, we are not there. Maybe going above 24,200 and somewhere near 24,000 is also the 200-day moving average. Those will be key pivotal moments also. Nifty Junior up 0.65%. So I think decent day for Nifty Junior. Nifty Mid Caps 0.74%, although giving up some of the gains of the day. Small caps very nicely up 1.57%. So confidence is coming back in small caps, although not yet out of the woods, I think. Bank Nifty up 0.37%. Again, has come back to about 2,500 points from the bottom. Very nice rise overall. Gold is up 1.54% today itself. I mean, that's an amazing run. We've crossed 85,000 on the 10 grams on Indian gold. And just at the start of this year, we were at 76,000 and we are already within a month at 85,000. This is how, lumpy returns happen in very short periods. And then, it may just go towards the side. But right now I am seeing the dollar gold price at around 2860 to 2870. I think that is gunning to go towards 3000. That's the kind of move I would like to see. And the rupee, of course, is also breaking very hard, 87.5 nearabouts, and that also is looking a little bit bleak. So both put together, gold prices are looking very good. Of course, it is slightly overbought, slightly the slightly you can say uh, some fluff is coming in the prices. There needs to be some pullback, but the trend is so strong right now. And there is also talk of problems of deliveries at London Bullion Metal Exchange. So if there is a physical metal delivery problem, then this can really go exponential. I mean, I hope we'll not go in that, because that will really disturb a lot of things. Momentum trends, advance decline 339 to 158, so very healthy advances versus declines. Heat maps, mixed bag. ONGC, Coal India, BPCL, BEL, Adani Ports, Aditya Birla, HDFC Bank, all these stocks doing well. Sorry, not Aditya Birla, Grasim, Tata Consumers, Tata Motors. Titan actually losing ground today. Asian Paints after its results. I mean, people are very disappointed. 4 years of no gains there. Nestle, Levers, ITC, FMCG is not performing at all. So this is the situation of the Nifty. State Bank leading the markets down on PSU banks, and you also had capital goods come back. Some of the PSBs were doing all right, and you had Indico, HAL, Vedanta. All these stocks were doing well. Energy stocks was the main sort of focus for the day. JSW Energy, Adani Green, all these stocks were up. Within the sectors, you can see capital markets segment ran up 4.8% today. So BSE Limited, the stock would have probably done really well today. And this coming after the National Stock Exchange, the unlisted stock results that came out yesterday. So I think people are enthused about that performance coming in much better than probably what was expected. People were expecting really bad results from this quarter since the volumes had dropped in the National Stock Exchange. But and I think BSE results are tomorrow. So tomorrow will be a big test for BSE Limited going forward. So capital market has come back very strongly, 5.4% for this last 1 week. Uh, Media, public sector enterprise, oil and gas, metals, energy, central PSCs, PSU banks, commodities, defense, all these were doing more than 1% for the day. So good for those sectors. A lot of sectors were flat, but the real losers today was consumption stories. India consumption sector minus 0.8%, FMCG minus 1.6%, very bad cut on FMCG actually, and real estate also down 1.9%. So this is where we are in terms of the sectoral moves. This is the movement in Motilal Oswal, Nippon India, Computer Age, CAM, Angel One, Nuvama, BSC, etc. in capital market space. Capital market space moving up gives a lot of confidence because that is sort of the leading indicator of the market. If anything is going bad in the market, capital market should be the first one to fall and also the first one to rise. So we are seeing a very good recovery in capital market, which will give confidence to the rest of the market. So now let's look at the strength and the weakness in sectors. Yesterday we analyzed the benchmarks. Please go see this video if you haven't so far. That is showing you within each of the indices what is the strength and the weaknesses. Today we will analyze the sectors. So all NSE sectoral indices are being displayed here. What is the drop from 52-week highs? What are the strength and weaknesses in each of these benchmarks basis from 52-week highs? So let's look at um, the drop from 52-week highs. So media has dropped 29%, energy is down 28%, public sector enterprise 25% each, oil and gas, CPSC, PSU bank. These are the sort of the worst sectors that have dropped. Here again, you can see that there is nothing in the 0 to 10% drop within these sectors. Bulk of the stock movement within these sectors is between 20 to 40% down. Some even have some 50% down stocks. Some have 40 to 50% as well. But bulk of the makeup is there in the space there. So if we were to see media index, we have Dish TV, Network, Z, Hathway, Den really losing very big. And the least, although these are also big down moves, the least drop is in Nazara, Tips, Saregama, Sun, and PVR, Inox. So no, I mean the positive or the least affected media stocks are also not looking so good. In the energy space, we have Adani stocks, Adani, ATGL, Oil, Adani and Sol, Adani Power losing the most from 52-week highs, almost 50% here. And then the best of the energy stocks also not looking so good. So Petronet, Reliance, Power Grid, GBTND, and Hind Petro. That is the situation in energy. In the public sector enterprise stocks, you have oil, IRFC, SAIL, BHEL, Concor all losing 40 to 45%. The least impact is there in BEL, Power Grid, in Petro, ONGC, and GAIL right there. So you can see that even if your portfolio in some of these indices were with the strongest of the pack, you would still be losing money. Oil and gas space, again, you see ATGL, Oil, IOC, MGL, Gujarat Gas, all down 30 to 45%. And the gainers are right here, 18 to 26% still down on that. A stock like Reliance being down 20% is quite a big deal. Again, the central PSC index that we have, again, you have 30 to 52% down. Most of these names were doing really well last year, but now it is time to, let them go. Or actually, it was some time ago that you had to let them go. But now, what are the leadership in this particular space is BEL, Power Grid, ONGC, NLC, and NTPC. Within the PSU banking space, you have all these banks that have lost 30 to 35%. And these banks have lost less: Indian Bank, State Bank, Canara Bank, Bank of Baroda, and Central Bank, although those are also reeling quite badly. In the metal space, commodity space, you have 20% down uh, from the benchmark. Real estate, MNC, manufacturing infrastructure are down 15 to 18%. Again, bulk of the stocks within these sectors are between 20 to 40% down. So this is where we are. In metals, you can see Hinzing in coppers, SAIL, Adani Enterprise, NMDC all down 32 to 43%. And you have JSW Steel, Wellcorp, Vedanta, PPL, Apollo, and Hindalco doing the best in that sector. Commodities, again, you have Adani stocks leading 38 to 54%, and you have UPL, SRF, which are hitting new highs. So these two are actually hitting new highs. Shriram Cement, Ultrasemco, JSW have not done so bad. So this sector actually is doing quite all right. Some of the stocks within them. Real estate, very mixed bag. You have Maharashtra Life, Sobha, Raymond, Prestige, Godrej Properties all down 30 to 41%. The ones that are least impacted are Phoenix Brigade, DLF Road, Ludha, and Oberoi Realty, although these numbers are also pretty sharply down. In the MNC index, you have SKF, Timken, ABB, Grindwell, Linde India down 37 to 46%. And in the top five, you have Maruti, UBL, Abbott, JB Chem, and United Spirits. So this is where how the strength would have helped you. Again, manufacturing index, in copper, Timken, same similar stocks are there. Some of these indices overlap with each other in terms of stocks. Here again, you can see, all these names which have dropped not so much actually. Divi's Lab, Coromandel, etc. Within the infra space, again, you are seeing Concor, Motherson, Bharat Forge, etc. losing big, and Bharti Airtel, Indian Hotel. Although they are in other indices also, but they are included in the infra index also. Apollo Hospital, Ultra Semco, and Shree Cement doing not so badly. Within the auto space, autos as a whole, as an index, has not done too badly. I would think it's down 15% only. Significant number of stocks here are also in 10 to 40% bracket here, most of them. Pharma is down only 10%. Most of the stocks are between 10 to 30%. Consumption is down 13%. FMCG is down 14%. And if we see the bottom most of autos, Tata Motors should not have been in your portfolio. Exide Industries, Motherson, Bharat Forge, Hero Moto. Uh, Eicher Motors is doing well. Mahindra is doing well. Maruti is doing well. TVS Motors is doing well. Balakrishna is doing well. It is very easy to see, which stocks are showing strength in the index. In the FMCG space, ITC, UBL, Marico, Radico, Varun Beverages, these are the ones which are impacted the least. And you have Kolpal, Balram Chini, Godrej, CP, Britannia, Hindustan Levers really going down 20 to 32%. Within the consumption space, again, you have Max Health, Eicher, Mahindra, Maruti, Bharti doing the best. And you have Adani Power, Asian Paints, Hero, Bajaj, Auto, Kolpal doing the worst here. Pharma is interesting because several stocks are hitting new highs. So Laurus Labs is hitting new 52-week highs. Divi's Lab is hardly down 2%. Biocon is hardly down 5%. Lupin is down 9 and Sun Pharma is down 11. So Pharma is still doing quite well. Within this space itself, you have stocks going 20 to 33% down. Gland, Zydus, Aurobindo, Natco, and Ajanta Pharma. And these three sectors are services, IT, and private banks, which have dropped less than 10% on an index basis. And you have several stocks within these indices where the stocks have not even fallen in double digits. So the concentration is more towards 0 to 20% kind of drop. So within services, you have Kotak Bank, Bajaj Finance, Wipro, Max Health, Infosys doing less than 5% drop, whereas Adani Green, Geo Finance, IndusInd, Adani Ports, NTPC, these have really crushed some of the portfolios from this index. In the IT index, again, you have Wipro, Infosys, LTTS, Tech Mahindra, Persistent doing the best, and you have TCS, LTIM, Emphasis, HCL Tech, Coforge doing the worst. But even in this worst situation, most IT stocks are probably still doing a lot better than a lot of other sectors. In the private banking space, you have Kotak Bank, CUB, ICICI, HDFC, and Federal Bank in the top category within the private banking space. And the worst losers are RBL Bank, IndusInd, Bandhan, IDFC, First, and Axis Bank. So basically, we want to try and find and stick to the strength, irrespective of the market situation, political situation, economic situation, etc. You always want to stay with the strength because the strength is telling you a an insight that the stock is withstanding all the pressure better than other stocks. And once the downward pressure is released, these stocks are likely to go up, or in case other stocks do come back up from the bottom, you will always switch into those at those points of time. So the strength pockets are where stocks have dropped the least. So you can see which of those sectors are there where most of the stocks have really not dropped, and that of course is the bottom 4 5 sectors that are there, which are really right now proving to be defensive sectors, and the most sort of damaged sectors are the ones where you've seen the index fall the most for those sectors. So now let's look at the recent performance of stocks that have fallen the least from the 52-week high. So if I were to see, let's say, um, uh, there are several stocks here where the last 1 year returns are still in triple digits. So even though a GVTND may have fallen 24%, but it still gained 131% in the last 1 year. So the 52-week drop is not the only basis on which you can really say uh, uh, whether that stock has done well for you or not. But yes, if you were running a, let's say, a momentum portfolio, then most of the stocks which drop, let's say 20 to 30%, would be out from your portfolio. So now, if you see the worst scenarios, MRPL has dropped 56%, Whirlpool is down 54%, Adani Green 53%, Kochi 52%, Ola Electric 52%, JWL, BSF. So many stocks are very near 50% drop from the 52-week highs. A long list at 43 to 48%, another long list at 41 to 43. So a lot of damage is there. But again, as I said, if you see from a 1 year return perspective, you have to see the perspective. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So many stocks, almost 100 stocks are above 40% returns. Uh, from last year. And if we go to the zero mark here, you'll see almost 280 odd stocks have, from the top 500 stocks that we've taken, is probably half the stocks have done very well in the last 1 year. They may have fallen a lot from the 52-week high, but they have done very well in the last year. So now, if you were riding these stocks in the past, you would have gained something, and of course you would have lost as they uh, fell from the 52-week highs, and it was at appropriate time to get out of those stocks and get into newer stocks, if that was the strategy that you were following. What you can do also is, you can go to weekendinvesting.com and get a portfolio health checkup done for your portfolio. It will tell you how much is the momentum score of your portfolio, what percentage of your stocks are in high momentum, low momentum, if you have certain concentration. So you can use this QR code and go there, and it'll give you a PDF report. So let me know in the comments, are you evaluating whether your portfolio contains strength or weakness, and how you are dealing with that? Thank you so much for watching, and I'll see you in the next one. Bye.